This is Dustin with Dustin's Dollars. Today, I'm going to be talking about Knightscope, about the recent FedRAMP approval they got, the authority to operate, talking through some of the implications there, also about some recent expansions and sort of what this means for the company and my outlook a little bit for things going forward. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Knightscope, so this video should be for your entertainment purposes only, because I could be wrong about everything that I say in this video. You need to do your own research before making any investment decisions. So this was a really big announcement, in my opinion. They finally got FedRAMP approval. This has been, I believe, a 3-year process. It's been on the roadmap for even longer than that. They spent a bunch of money on this. We've seen it in the filings. They attributed some of their, I want to say it's their G&A costs or some of the other stuff, R&D costs. I can't remember exactly where they put it off the top of my head. But they've called out and they said, hey, this year our costs for this were a lot higher because we were spending on FedRAMP approval, or spending to implement the procedures, policies, and going through this process. And so this is huge, right? And what does this mean for them? This means that now they, as far as I understand it, could be wrong, they have been approved by the federal government that their procedures for handling data are sufficient that they can handle data, the data they've been approved for the government, right? For Knightscope services, that they can actually do this monitoring, and that the federal government is happy or satisfied, at least, that they've met the requirements that they can do this and handle all of this data. And so this is really big for a couple different reasons. I'll go into that. So the first and most obvious one is that now they can sell into the government. They have this contract. Let me see if I got my tabs open right. So this was one, and they talked about it here back in 2020. I think they might even gotten the contract maybe before 2020, might even be in 2019. I didn't go back and look it up, but it's been years since they got this contract with the VA, right, with the U.S. Department of Veterans Affairs. Like I said, this blog post is from 2020, and they talked about it, and they were going to deploy a K5, but they had to get through the FedRAMP process, right? This has been on the books for a while, presumably part of their backlog, as I reported, but they haven't actually been able to deploy that K5 because they've been going this FedRAMP process. They needed this approval from the federal government in order to actually let that robot operate, so that all that data that it's collecting on, federal property, that they've been approved for that. And now, of course, they can sell into the government. And this is huge because this expands, their addressable market. I think they called out even in this particular press release that this addresses their, increases their total addressable market. It's improved, and you might wonder how big is this, and how much have they actually looked at this in the past. They did. I don't have real numbers for you, but they did list on their. Let me zoom out a little bit. Wrong one. On their investor presentation from 2023, they've called out specifically where in the federal government they've already had discussions. They've already talked to Federal Protective Services, FEMA, the TSA, all these different places, and they talk about what types of locations might those agencies have where they could utilize Knightscope services, and there's tons of these. And I did look it up. Let me open up the link real quick, even just for the VA, right? If we just look at the VA, let me open this link. Give me one moment to pull it over here so you can see it. The VA itself, they are deploying at one facility as part of the contract they already have in the books. But the VA, maybe this is too small for you to see, they have 172 medical centers just with the VA, right? So if the VA likes this, they say, hey, this is standard practice or standard procedure. All of our facilities are going to have one of these robots, patrolling the grounds, checking the parking lots, whatever it is that they're mostly utilizing for. And this is if it was only one robot, right? These are not small facilities. They may need multiple, but if they just used one K5 here, this would overnight be, a doubling of the amount of robots that Knightscope have, roughly, right? We don't actually know the number, but I think, my estimates put it somewhere in this range, 150, 160, 170. That's where I think they're at roughly right now. And so this would be just the VA, could be a doubling, and then you look at all these other federal agencies and you think about those, how many locations they have, that now Knightscope has removed one roadblock for being able to sell to them. And so this is great. And I think even more to the point, once one federal agency is using them, I have to imagine word will get around and they will see the success there, and that the same strategy could be applied elsewhere to solve similar problems within the federal government. And of course, that is all good, but this even helps, I think, for non-government clients, right? Because this is FedRAMP approval, in my opinion, not sure, but I have to imagine that this in and of itself is going to be, what do I say, sort of a shortcut for organizations that they're trying to sell to. They're trying to, they're talking to them, and those organizations say, well, how much data do you collect, and how do you handle that data? And we've got lots of requirements for how you do that. I have to imagine that many organizations probably have a fast track, which is just, are you FedRAMP approved for this, right? Is the federal government comfortable with your handling of data? If so, fine, you check the box, right? We don't have to spend all the time and effort to audit how you're going to do this. We don't have to be worried. We can sort of outsource that and assume that the federal government has sufficient requirements for you with your data that are also going to be good enough for us. And I especially have to imagine this is going to be true for law enforcement agencies, right? A lot of law enforcement agencies or other sort of state associated entities. Maybe you have state associated colleges or non-federal government buildings, courthouses and such at the state or local level. I don't think those are federal. I'm not an expert on that, but those are the sorts of things that I would imagine they probably are very very much in line with the same requirements as FedRAMP in terms of data handling. So, hi, Wakaza. Thanks for hopping on the stream, talking about Knightscope today, and this very exciting approval that they got from FedRAMP this year. And even more to the point, looking long term, I should say, this has been one of the the outlooks for the company that I've heard from them for at least 5 years. I want to say it's been I've heard it repeated year after year after year, where the vision, the long-term vision, let me see if I can zoom in, so hopefully you can see it here. And this is included in their investor presentation from 2023. That's what I'm looking at, but they've been repeating it for years. This is the long-term vision of the company. They want to build something that's analogous to a defense contractor, but instead of focusing on the Department of Defense, they're going to focus on the Department of Homeland Security, the Department of Justice, and the law enforcement agencies that are in our country, right? And again, Department of Homeland Security, Department of Justice, these are more federal agencies. They are going to have I assume the same FedRAMP requirements, right? I don't know that I did do a video, it's been more than a year at this point, going into some of the nuances of FedRAMP approval. I don't think that getting FedRAMP approval just for one agency is automatically gives you FedRAMP approval for the others. But what it does do, I think they can basically copy paste all of their work that they did in order to do to get the approval for one, right, when they applied for that. I think it's a very, very streamlined process once they have approval from one agency. And even more to the point, for the company itself, more than likely all the procedures that they have in place are already sufficient, right? And again, there might be some nuance to this where some agencies are dealing with data that is not just I don't know what I want to say, normal data, right? There's some secret data or top secret data. Of course, there are additional levels of requirements, and Knightscope, I don't believe, has those. But I don't think that's what Knightscope is going to be handling, right? We're talking they're patrolling parking lots and campuses, right? This is not exactly top secret data. So that, I think, is just, again, one more step down the path of realizing this vision for the company that, again, in the long term would be a much larger company. So one other thing I do want to call out along these lines, let me see if I could find the right tab, is if you look back, they have the Robot Roadshow. They have actually had meetings in Washington, D.C., right? This was in May of 2022. They had the Robot Roadshow at Federal Protective Services. They have at another, hotel in the area. They've had some others in, I want to say it's in Virginia, very close to DC. They had one in Kennedy Space Center in June of 2022. Hopefully it's not too small for you to see. But they have had these visits there. You have to imagine that when they say, you look back at the investor presentation talking about the agencies that they're in conversations with, right? Some of these folks from these agencies have actually gone out and seen the robot. So they're very well aware of them, at least someone is. So that, I think, is, again, things that I'm looking for in the future where it's just sort of stacking up more and more. The odds are in our favor that we're going to see these expansions And, they've got their foot in the door. So that's really great to see. All right, speaking of, having their foot in the door and expansions, there was another really great announcement, in my opinion. They didn't have a very big impact on the stock, but, we see the 6 robot expansion in Detroit. This is, again, from this broader, what do they call it, a master agreement or something of the sort with PENN Entertainment, right, where they said, we are going to roll this out to 43 properties nationwide, right? And this is, I had a video, I put forth a lot of my opinions in early 2022, in February 2022. We're talking about upcoming catalysts. The FedRAMP was one, and finally we've seen that. Expansions, large expansions from customers after they trial this, what was another really big one. And this, I think, is the largest agreement that we've seen with Knightscope, and sort of paves the way for more and more, right? If we see these things, this is where Knightscope can really ramp up the business very quickly, right? So they are just at one property, they're deploying, if I understand correctly, 6 robots here, right? 2 K5s and 4 K1 hemispheres. And so again, this is getting them to 14 robots for this one client, and that's at the 9th property of 43. So we could expect another 40, 50, 60 robots under this existing agreement that they already announced in September. And these aren't all happening overnight. It's been 4 or 5 months since they announced this, and they're now getting to their 9th property of 43. So it might take all the rest of this year, maybe even longer than that. It doesn't really matter, because this is just this long runway of growth. Hi, Thebes. Thebes says, I'm in Knightscope and AITX, both plenty of room for both to grow. So I totally agree, right? And that is, I'm not going to go into my opinions on AITX, but the market that they both play in, I think, is so low penetrated. And that is, for anyone who is bullish on either company, I think that is, absolutely the cornerstone of your thesis, right? Where the total addressable market for all these things is in the billions, right? And both of these companies are, at the single-digit $1 million mark. Right, so I think both of these companies, in terms of the market, the revenue, could 100x, and the market still is not saturated. Right, I think this is that is a big part of my thesis for Knightscope. Again, I won't share all my opinions on AITX. Today I've got other videos that do talk about that. But yes, I can see where someone could be bullish with AITX, and I think that is clearly one of the pieces that is shared amongst the bullish thesis for both of these companies, right? It's just that the market is ripe, and especially as these products are actually getting mature, right? They're finding fit with the market. This is really what we want to see, for both companies. For either company to expand, they need to get this sort of these large agreements and have it to where it's one client where they're expanding to all these properties. I mean, it just makes sense, right? It's just common sense that they find something that's going to save costs on security services at one location. They're going to roll that out to more and more and more. I mean, why wouldn't you? And so that is, it's great to see. Sorry, where was I at? So they had this expansion, and it's one other sort of point that I wanted to call out that I infer from this, right? Now that they are on their 9th property and they are expanding this contract, it tells me sort of, number one, that they did get that fit with the client. The client trialed it, they were happy, and so they signed this much broader agreement. And so that's good. That validates, not that we needed even more validation. I think we've seen this, but this is, really the strongest validation because of the size of this agreement. But the secondary piece here is we continue to see this backlog of, I want to say, just on the robotics side, the ASR side, it's, $2 million or so in terms of the backlog size. And we've seen that pretty consistently over the course of a year. And one of the things I've been a little bit concerned about is, is this off-putting to new sales, right? Or to existing sales, right? People canceling in the middle because they've got this backlog. They can't possibly deploy all of this, and it's just taking so long, right? It seems like they haven't actually gotten through this backlog for a while. We don't have quite enough color to know, what is the oldest order in the backlog? What's the average age of the order in the backlog? But the fact that this one property, this one client, I think they said that they've deployed, I think in one of theirs, they said they deployed their first K5, and that was followed by subsequent deployments in 2 more properties. So I have to imagine they've actually deployed, had the robots physically there at a couple of the properties. 3 is what I'm inferring here. And this, again, was an announcement from September. So if they deployed a couple more over that time, this does tell me that Knightscope is able to, that they are producing the robots, they are getting them shipped and deployed, and that this time to between order and deployment is actually acceptable. Because I think it's just one thing that I've been concerned about, and now that we actually see this, now that we see some this client expanding, I think that's actually a really good sign. It's a bullish sign, and hopefully, this has been part of my, I think I've repeated a couple of times, part of my thesis is, or part of my reading into the situation as to why that backlog has been what it is and why they might get through it much sooner is, they're deploying these 5th generation K5s. I really think that both the reduced assembly time and also some amount of, getting the right components in place and quantity, they may have had a bit of a bottleneck where they weren't able to deploy too many more of the 4th generation K5s, and they were gearing up to just deploy all of the 5th generation now that we're seeing these actually being deployed, right? We know that the NYPD had a 5th generation. We know that there's been a couple more. They said this is now the standard generation that they're shipping. Now that they're shipping 2 more here, I think this is great to see that, and that may really bring down the backlog as they built up their inventories and now are able to just use those parts, get them assembled, and deliver those. So I think this is great. One other tidbit that they did have in this is they talked about not this one in this announcement when they announced the FedRAMP approval. They talked 2 other tidbits. One, that they think they're going to take pre-orders in 2025 for the K7. So I think that's interesting. I don't have a whole lot to say about it. I think they've got a lot of work ahead of themselves for that one. The one thing that I think this might be a little bit easier for them to do than sort of, because I've heard some skepticism that, hey, this is fully self-driving is a really difficult problem. Clearly, they already have very, very simple versions of this with the K5. The K7 is presumably, the value proposition will be handling a larger area. Sorry, if you're not familiar, I just assume folks are familiar. I should step back. The K7 is more like a car. It's a small car rather than sort of this R2-D2 robot that goes around at 3 miles per hour. I think the car will probably be going at 10, 20 miles per hour, something like that. I don't know. I don't think they posted a speed, but it's a much larger robot intended to cover much broader distances. And so I think, so it is more like a self-driving car rather than just a little robot that goes around a smaller fixed area. But they are still initially targeting, I think they said it here, maybe not here, maybe it's in the blog post that talks about profitability. They are still targeting, private properties, private roads and properties here. So this is not going on a public road. So I think there's a lot of issues with the K7 that they don't have to deal with, right? This is a question of how do we scale, or how does Knightscope scale the technology that they have for the K5 for, patrolling a fixed area to a larger and faster vehicle that could potentially, that has more issues to kind of have to deal with, right? The terrain will not be quite the same, and it will be a broader area, have to travel faster. So there's some more things to have to handle with that, but I think that's it's a tractable problem for them. I think when they start talking about some of these models that might be able to patrol on public roads, that is a very, very big problem, and that's one that I don't think they should be targeting anytime soon. Yeah. But this was a really, sorry, well, cause I will get to yours real quick. I just want to have, because I just 1 or 2 more comments, and I'll just do chatting with you all on the stream. They talked about focusing on profitable growth, and they basically said, phase 1 was getting us to this point where we've really gotten product market fit. Now we want to get that growth to be profitable, and there's a lot of things they called out here. I've actually talked about a fair bit of these, but I think this is what we need to see in 2024, and I think this is good for them to call this out. They think they're going to cut $1 to $2 million in annual fixed costs, sort of from presumably G&A and sales and marketing, and there's a lot of things that they think they're going to be able to do in order to actually improve their operating costs here, and I think those are all good. I would really love to see them come forth with some estimates on numbers, even if they're just percentages. I'm really not sure what the impact of these things is. I had my prior video, or one of my very recent videos, was talking about the missing Knightscope investor presentation, because there are a lot of metrics that I want them to include in their investor presentation and they don't. So seeing some metrics behind these would really give some credibility to those. But they all sound like great things, and so hopefully they can make this happen. Anyways, we're just gonna have to wait and see. I think profitability is the number one issue for the company going forward, and so once we start to see that flip, that is going to be a really great time to be invested in the company. All right, let me get to your comments. So Walkaza says, next stop, win the lawsuit against Capybara and those involved. After that, NYPD contract. Next, SEC new policies to combat naked shorting take effect in August 2024. Lastly, Q4 2024. I think that's Q4. Sorry, my things overlap, and I can see Q4 2024 profitability. Yeah, absolutely. I mean, all those things will be good. While the company still does have to dilute, yes, the any amount of shorting is making things harder for the company. I think it will be a really great announcement for the NYPD, right? I'm focused more on those fundamental things. The NYPD contract will be, if they get that, I don't recall how long they said the pilot period was. I'm not sure if they explicitly announced that or not. It'll be really great to see what happens there. I think it will be both a good headline, and once again, they are targeting, some federal government agencies, the NYPD. They're targeting a couple of these top tier organizations that are really going to help sell the story, the credibility for all these other people who are a little bit, let's say, hesitant. I think, of is it actually, is the robot safe? I think people have a lot of concerns. Is it safe? Does it do a good job? Is there something I'm missing here? Why isn't everybody doing this? Or why is not everybody doing this? Why is practically no one doing this? Right? This is a brand new technology. It's very unproven. But I think when you get federal agencies, the VA, you get the NYPD, you see a large client like PENN Entertainment deploying these at each of their properties. This is going to start to really be an accepted and accepted technology, and some of those conversations are going to go away, where people are just going to view this as one more option for security services. And so I think that is going to be great. That also may be coinciding with improved profitability through some of this, some of their actions they're taking, could really, really be good, for the company and for the stock as an investment. So that is basically all I had to talk about today. I really appreciate y'all hopping on here. I think there's 4 people on the stream, if I'm seeing this correctly, which is fantastic. Rate of adaptation. Rate of adaptation. Is that rate of adoption? Maybe. Adaption. Sorry, not adaptation. Adaption. I think it's adoption. Sorry, I think it might have just been a typo. My bad. It's a little harder when you're live. You're trying to read everything in real time. Yes, the rate of adoption. I think this is one of the things I think is a catalyst. Like there's this positive feedback loop. I've talked about this in the past. I'll repeat it again now. The more these robots that are out there, the more people get exposure. And when they talked about cutting their budget here, right? They talked about cutting, $1 to $2 million in fixed costs. Fixed costs means, I imagine they're talking G&A and things, right? They mean line items in the income statement that are not, their cost of service, cost of products, right? They're talking about some of those other ones that are more fixed line items. And, there's one of those of sales and marketing. And I actually was going to call this out. Just go to the roadshow here and you look at this. There's only one roadshow stop on the books for 2024 so far, right? And I do have to wonder if some of this is them. They've got a backlog. They don't need to be making, too many more sales at the current moment while they still got the backlog to get through and to deploy. And so they are reducing some of the spend on the roadshow, right? This is part of their sales and marketing spend when they do all these stops. And, we do see one here, and clearly I'm going to assume that the company knows what they're doing. Maybe they have a very, very interested client here. I don't know. Surely they are very conscious about this, but, I think when you contrast that with seeing them have, 5+ stops every single month, this is probably some of what they're talking about when they say we are actually reducing some of those fixed costs. But on the flip side, the more robots that are deployed, right, having this at every PENN Entertainment property, having this at NYPD, just more and more as they are around, they don't need to do the marketing for awareness when people can see the robots, and that makes them aware. And so I think that itself is that in and of itself is, going to continue to grow. And so that adoption is going to feed on itself as a positive feedback loop, where the more robots are deployed, the more people are aware of the robots, and that gets more people, interested in, or at least considering it as an option. Hi, Jay. Jay says, I joined late, but did we talk about their bonds offering at 10% interest rate for the next 5 years? I think that is very aggressive. In what way do you think that's aggressive? So I actually think, I haven't talked too much about the bonds offering. I personally have a couple thoughts. I do not own any bonds. I don't currently have any intention of investing in the bonds. I think 10% probably is under what their cost of capital would be if they went to, Wall Street at the current moment. I think realistically speaking, they'd be looking more at, maybe something like 12% for sort of like their most senior bonds, and maybe 15% for things that are not, just because the state of the company, they're not, you look into the future and you can see where they're going to grow and get this point of profitability, but they're not there yet. And most people are investing in bonds, right? They won't share in the upside there, right? So they really want to protect their downside. And so I think bond investments are not for me. I really don't own, I shouldn't say I don't own any bonds. The vast majority of my investable funds are in stocks. I think maybe there's a little bit of bonds, some things where I didn't have a lot of choices with my, employer plans, but for the most part, I really am not invested in bonds across the board. Sorry, let me see. Jay says, I mean that as a big liability considering path of profitability. So from that perspective, they need capital. They need capital one way or the other, and this is actually, I think, a cheaper way. Well, the issue with continuing, so they have two options, right? They have debt or equity, right? Meaning stock, and they've been funding by stock, and they still have that lever to pull, right? They can still sell more stock at the money or at the market, and they are continuing to do that. In terms of that interest and then that being a liability, right? I think the payback, the actual principal repayment in 5 years will be, that principal payment is far enough away that I'm hoping the company is much, much larger in 5 years. So I'm not particularly worried about that at the moment, right? Assuming the company can grow, I don't think that's the issue. In terms of the interest payment, which is what I would imagine you're talking about, yes, that is a big liability for them, although it kind of comes to what can they do with the capital that they get, right? If they are right now in the position where they've got, let's just do some quick napkin math. They've got a $2 billion backlog of the robots. How much capital do they need in order to pay for the parts and the the manpower that goes into getting those deployed? You look at their unit economics and you kind of figure it's roughly 1-to-1, right? Their target here is for them to basically, their target is for them to spend the first year the actual cost of what they get in revenue. So if they have a $2 million, $2.5 million, let's just call it two, I'm rounding here, rough numbers, $2 million backlog, that means roughly they need $2 million of cash to get those all, get all the parts, get it assembled, put it together, shipped, and deployed at the client. Right, so for that first year, they need that capital. They need it. But what happens once they get it deployed? So they take in the bonds. Yes, they're going to have to turn around and take some of that money and pay it back in terms of interest. But they're able to take, let's go for the first year, 90% of that money, 10% they retain, they would pay back to interest. They take 90% of that money and they can put it into deploying a robot where they've already made the sale. Right, so they're literally looking at something close to these economics. I don't think they're quite here yet, but this is, they're what do I want to say, working both paths to try to converge to, a good state for the company. And so if they're able to take that money and immediately put it to work, immediately start bringing in revenue, I think it is a good use. And I don't think it is particularly aggressive. I think if they were just doing this without the backlog and they're doing this in hopes of, well, hopefully we can take the money and hopefully we can spend it on advertising and that will eventually convert into sales, then yes, I think that's a much shakier proposition. But I actually think because they are in a position where they have the backlog of sales already on the books. They've got contracts for these for a year. I really don't see it as that big of. I think they have something very tangible to do with that money. That's my assumption. I think as they continue to make sales, right, they'll be having more and more use for that money. And again, this I don't know how much of these remaining 43 properties are counted in the backlog versus not. I mean, I don't think there was one quarter we saw a massive jump up. 40 robots would be a ton, right? That in and of itself might be a $2 million, if I can just roughly do the numbers off the top of my head. Order of magnitude, $2 million additional in their backlog. And so I have to imagine they're going to have more and more of these sales they need even more capital to meet that demand. Jay says, oh yeah, right. On the other side, bonds are a nicer way to raise capital rather than the gimmick stake in a company by going to Wall Street or big investors. Yes, exactly, right? And so I think as of right now, with both the bonds, I don't know where I was going back to look here, with both the bonds and their at the money filing that they have where they can sell shares, they have both options available to them. This is the point where you have to kind of trust the company, you trust Bill and the CFO that they're making good decisions in, how they're allocating, what they're using to fund the company, right? And this is, again, you just have to kind of trust management at some point on these things. I do think my bigger concern with debt is if they start to grow too much to where that debt load gets to be a lot. Because even if they drew the full, what are they looking for? I think it's $10 million in bonds. Probably have a link down here. Where's the bonds? Bond. There it was, right at the bottom. I can't remember off the top of my head if it's 5 or 10 million that they're looking for. Maybe it doesn't even say. Even if it were $5 million, right? That's $500,000 per year that they have to pay in interest. But if they had $5 million in cash on the books, if they close all of those bonds and they get that money and they were able to deploy quite a few robots, right? The revenue from those would more than offset the money that they take in, or more than offset the interest payments that they'd have to be making. So that's really, you have to trust that they have a good use for that money. So, and again, I think this is using the appropriate tool would be using the bonds is best when they have a quick turnaround that they can do with that, because they can immediately turn into revenue and that can help offset those immediate liabilities that they're taking on. Whereas the equity, you sell that to help fund things that are more speculative and more long-term in terms of the rewards that they're going to get for those, right? If they were funding R&D for the K7, I think that would be a bad idea to fund that with bonds, but equity would be more appropriate for that. And again, maybe it's a little hard to sort of to keep in your head to say that they're actually doing both at the same time in the company. And so how they manage this, again, is it's a tough situation to navigate, and that's where you have to trust management. Hopefully that makes sense. Those are my thoughts, and I'd be happy to hear what y'all think. Hi, Transient Stacker. Thanks for hopping on the stream. Talking about Knightscope today. Although I'm really through everything that I had to talk through, so I don't know any other questions or comments. That's all I really had. Yeah, nothing else really to talk about. Really appreciate having you all on the stream. I'm trying to get back to doing this every Sunday. I know I took a break for the holidays. Just too much going on, wasn't able to keep up. Let me know what y'all would like to talk about in future streams. I mean, obviously I kind of pull some topics up every so often, but if there are things you want to talk about, I'd be more than happy to look into some stuff. Otherwise, I'm going to hop off. I've been doing this every Sunday, trying to do it about the mid-afternoon Eastern U.S. time. I will keep that schedule as much as I can. I'm on Twitter. If you want to talk to me there, just Dustin's Dollars. Also, you can message me on YouTube. Comments below. Anything else? All right, I think that's been a good minute or so. I don't see anything else in the comments, so I am going to hop off. Thank you all. Hope you have a good day. Take care.